Welcome to Trading Nation. I'm Brian Sullivan. We're pleased today to be joined by Nick Colas. He is Chief Market Strategist with Convergex, and he joins us now. We've got a lot of ideas for next year's stock picks, Nick, but you're joining us with three rather offbeat asset classes. Let's go through the list because I think it's really interesting. And first, start with high denomination bills. What do you mean by this? I mean, I kind of have an idea, but how do you invest in it?
Well, there's been a lurking kind of war on cash around the world, particularly in high denomination bills. We saw it most obviously in India and then in Venezuela, but even the European Central Bank is canceling out the production of their 500 euro notes starting in 2018. So that'll become a collector's item at some point, just like the old $1,000, $5,000, and $10,000 bills are here in the U.S. Even though they're legal tender, they trade for far more. So that's one kind of idea. But it's, on top of that, just be aware that a lot of policymakers don't like high denomination bills. So if you want to have a little nest egg of $100 bills, might as well do it now, because who knows what happens a year or two or three from now.
Wow, very interesting point. Let's go now to number two, which is sort of semi-currency related. Silver. We talk a lot about gold here on Trading Nation. Why is silver maybe more golden than gold?
Yeah, look, the bottom line on precious metals is, given the trend in inflation and what the bond market's telling us about inflation, it's smart to have some precious metals in a portfolio. The choice is gold or silver. Silver is actually cheaper relative to gold than it has been over the last 10 years. If it were trading at fair value, it'd be closer to $19 now versus $16, which is where it currently trades. And on top of that, you get a nice industrial exposure upside. Half of the end markets for silver are actually industrial, electronics, solar panels, and so forth. So you kind of win if you get inflation kicking in, and you kind of win if industrial production kicks up as well. So you get kind of a 2-for-1.
Okay, and this may be the most unusual of the three. Not art. I mean, it is, but it's Russian art. Why Russian art?
Well, you know, if you
Which
think
some
about,
might consider an oxymoron in some respects, but go ahead.
if you think about who's going to be the biggest geopolitical winner of the next 24 months, I think we'd all agree Russia's high up on the list, given how much in the doghouse they are now geopolitically around the world versus how the president-elect currently thinks about Russia. So if you see incremental income going to Russian oligarchs, the Russian elite, what do they do with that money? They buy Russian art. And so whether you're thinking Fabergé eggs or Tsarist-era portrait paintings, Russian art could be just as good a way to play the Russian economy as Russian stocks.
Well, if you've got to buy a portrait painting, why not a Tsarist-era portrait painting? A really interesting idea is high denomination bills, silver, and Russian art. That's why we like you, Nick Colas. Thank you very much for joining us on Trading Nation.
Thank you.
Folks, and thank you for watching. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.